Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Tuesday, March 29th, 2022. And our top story today, homeowners spin rising real estate prices into riches. Well, joining me now to discuss this and a lot more, Deidre Woolard is an editor with The Motley Fool. Deidre, thanks so much for joining us on the program this morning.
Glad to be here. Thank you.
All right, Deidre, this is a conversation that you and I and others continue to have. Home prices have really spun out of control. Now, some of that appears to maybe be dampened a little bit by these mortgage rates. We'll get into that in a minute. But there was a great Bloomberg article about how homeowners are leveraging their home sales into buying additional homes and sitting on their own little real estate empire. Your thoughts on this?
Yeah, this is really fascinating. So the Bloomberg article referenced some research from John Burns Real Estate Consulting that showed that in January of this year, 33% of homes were bought by investors. And the interesting part of that is that 27% of them were bought by small investors, which they define as under 10 properties. So there's been a lot of press coverage. 60 Minutes did a whole special recently on institutional investors. But what this data shows is that there's a lot of smaller investors that are really growing their portfolios. And you're absolutely right. Part of that is due to refinancing in this what was a very low interest rate environment.
Let's circle back. When you and I talked, at the height of the pandemic, we talked about landlords and maybe it was some of these types of people, right? They had a couple different properties. They couldn't make payments because their renters were not able to make payments. Is this kind of the cycle coming full circle where maybe some of those landlords sold off property, or they just got, maybe they had the property repossessed by the bank or whatever, and now there's a whole new class of people moving in?
I'm not sure it's a different class of people, because one thing that we talked about this during the pandemic, we were concerned about the potential for foreclosures, short sales, things like that. It didn't really happen. One of the things that happened during the pandemic was things shifted so quickly. We went from, eviction moratoriums and fears, and then now we've got rents up just astronomically year over year. So foreclosures and short sales are still in the low percentages, like 1 or 2%. So it's not really a new class of people. I think it's a lot of people who held on to their properties, maybe refinanced, maybe had some forbearance, so they had a little break during the pandemic.
You mentioned rents. I mentioned rents. Let's talk about rents, because we often talk about buying a home, and we know there's a lack of inventory of homes. But this is also putting a lot of pressure on people. People, if they can't buy a home, maybe they're a first-time buyer, they're going to rent. But rents, especially in large cities like New York, Washington, D.C., L.A., San Francisco, going up and through the roof. I mean, this is really becoming a challenge to find livable space.
Yeah, Redfin released some data that showed that in Austin, Texas, rents were up 40% year over year, which is just unsustainable. So yeah, a lot of cities that got hit during the pandemic too, not like Austin, but LA, you mentioned, San Francisco, rents are back up there. Rents are back up in New York. Anybody who rented during that brief window of affordability in New York and locked in a good lease is probably feeling pretty happy right now, because rents are up very high. And there isn't really a lot of inventory on the rental side either. Inventory keeps being something that you and I discuss together, because it's just really the sort of the focal point where the squeeze is happening, because people can't buy homes because there simply aren't enough for sale.
And that's really prices out the average American, the average person, right? I mean, when you see these prices go up, and in the midst of high inflation, high gas prices, food prices, now you've got high rents, and let's not take away from the landlords, right? Because they suffered receiving money during the pandemic, right? People didn't want to live in New York. So they took a little bit of a bath. So it seems like they're kind of making that back up, but still, it's a big problem for people in terms of affordability.
Well, when we talk about real estate or anything really, it's always about what the market will bear. So it's all about what people will continue to pay. So existing median home sales prices, they're up about 15% year over year. That will probably change because we are reaching a level that may be beyond where people can afford to buy, and that's going to start to bring things down. National Association of Realtors is forecasting about a 7% decrease in existing home sales this year. So we may be seeing some leveling off happening.
Yeah, I was going to ask you about the housing market. There is some uncertainty with the U.S. economy. I guess it's all predicated on the invasion of Ukraine, the inflation that we're seeing. I know people often look at the yield curve and whether or not it's inverted or flattening, right? That's a key indicator often of a recession. But what about the long-term prognosis for housing prices? Is this something that we're going to continue to see growth? It may not be, not growth, in terms of scarcity, lack of inventory, and therefore home prices. Does that continue to go in that severe upside, or will we see more flattening of that curve?
So much of this is going to depend on interest rates. You know, they're starting to creep up. Their last week, Freddie Mac's PMMS survey had it at about 4.42% for a 30-year fixed, higher than we've seen in a long time. We're probably cruising toward 5%, certainly before the end of the year. And if the Fed continues to raise the federal fund rate, that'll also correlate with interest rates. So it's going to be an interesting thing to see. I think we don't know yet, but I think by the end of the year, we will have a much better picture of what housing inventory is really going to be and how the market's going to respond.
Last question for the segment. I mean, back on the interest rate conversation, they're saying that they, meaning the Fed, we could see 6 interest rate hikes. So if you know that there are going to be interest rate hikes in the future, wouldn't that say to the market or to a home buyer, well, maybe now's the time to buy? Because first of all, interest rates are historically low. Mortgage rates historically low. I mean, we're not anywhere near the late 70s and the 80s when I grew up as a kid, and what I remember. So historically low. But if that's the case, we're going to see more of an increase, and mortgage rates are not completely it's kind of an inverse or a lagging relationship to the federal funds rate. But wouldn't now be the time to buy?
If you can find a house, I mean, that's part of the problem, is that people can't find houses where they'd like to live. So yeah, it's going to be interesting to see how much panic there is. We will probably see a little bit of a spike in refinancing as rates start to go up, but already rates were so low for so long that a lot of people already refinanced. So there's already been that wave, and there really isn't enough inventory to spike a major buying rush right now, even though we're just starting to enter a home buying season.
Yeah, and I'm wondering, we'll have to talk about this next time, but what's going to happen with RV sales? Maybe they're going to go up. Maybe people are going to say, look, screw the house. Let's go move into an RV. At least it's mobile.
They boomed during the pandemic.
They did. And there was some great content produced from that. Deidre, I need to take a quick break. When we come back, we'll talk about commercial real estate, and industrials seem to be leading the post-COVID comeback. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you over 50? Would you like to get up to 33% more income in retirement? Then call now for this free book, Annuity Do's and Don'ts for Baby Boomers. This free book reveals little-known secrets about annuity strategies that will help you make the right choices before buying an annuity. Call right now for your free book, and as a bonus, we'll also throw in a free annuity rate report, both absolutely free for calling Annuity General today.
Call 800-504-8194.
Welcome back. We're talking this morning to Deidre Woolard. She's an editor with The Motley Fool. Deidre, thanks so much for staying with us this morning.
Thank you.
All right, so we'll shift from residential. Now we're going to talk about commercial. And it looks like, based on the National Association of Realtors, that industrials are leading the comeback for commercial real estate. I think that's interesting. First, before we get into the who, the how, the why, what is an industrial?
Industrial real estate is really a kind of a wide category because it can be warehouses, which is what we mostly think of, and logistics, things like that. But it can also be manufacturing. And that's another big part of what's driving the boom is we're seeing manufacturing increase. And certainly when we talk about industrial, it's mostly warehouses because we have a huge supply chain issue, and the rise of e-commerce is just driving incredible pricing in industrial real estate like we've never seen before.
Now, commercial real estate took a huge hit during the pandemic. We've talked about that. Offices still, I think people are going back to the office, but now it's this hybrid workforce. Is this industrial leading the way? Is that just a result of, look, people aren't going to go back to the office. If they do, they're going back in a part-time way, in a hybrid way. I mean, is this more of a trend than people give it credit for?
This is something that was existing before the pandemic. E-commerce keeps ticking up. You need to have warehousing near big cities, near airports, near trains, near ports, everything. So that has already been a factor that was happening. Then you add in the supply chain difficulties. Then you add in sort of a decrease in globalization and more companies thinking long-term about having manufacturing in the U.S. and you get this demand for industrial that is just keeps going. And so that is absolutely contributing to all of this. Pandemic made it worse because of the supply chain, but it was an ongoing issue.
Deidre, let's talk about data centers. We often talk about how data centers, everything's in the cloud now. BRN's in the cloud. I think a lot of what Motley does is in the cloud. It's somewhere, and you need data centers. You need servers. You need power in order to do that. Is that still the case that is going to be leading the way for some of these in the commercial real estate sector? And is that an opportunity for investors?
There are a few great data center REITs, although there are fewer of them than there used to be because of consolidation. But we also see companies like Facebook recently put together a data center in Idaho. We're seeing more and more companies doing that mix of owning and also leasing data center space. So the same way that Amazon will own warehouses, but they'll also lease a lot of warehouse space. We see the same thing with data centers because companies really want to be covered because we've seen the impact of those major AWS outages when one of those data centers goes down and nobody can access their Netflix, nobody can get into Amazon. It's really, really impactful. So companies are trying to figure out how to do that. So data centers is a huge story. The other thing I'm thinking about a lot when it comes to data centers is what it means for the cities. They don't create a lot of jobs. There are some concerns about water because data centers use water to cool all of those computers. But a lot of states are welcoming these data centers and putting in tax breaks that make it easier for companies to to build there.
Yeah, look, I wonder what it does for climate change. Have all those servers, right, kicking off the heat that you mentioned. Gosh knows what else. I know there was a big deal made about cryptocurrency mining, right, and what that had an impact on the sustainability and ESG industry. I guess another question here, Deidre. What about retail? I mean, are people? I know after the pandemic, or people were looking to get out and they wanted to go to restaurants and they wanted to go out to the malls and shop and do some of those things. Is retail still advantageous for people to consider? And are people still looking to go into those spaces? I still feel like I need to see the human beings. Even though I love looking at you on the screen, I like to see people with legs and waists and torsos.
Well, yes. It's interesting. You see companies like Warby Parker, famous for glasses online. They're planning massive expansion into retail stores in the coming year. So we see a lot of companies that are doing that. It's really that sort of omnichannel thing where companies are building their e-commerce at the same time that they're maybe expanding. Not all retail is doing well. It depends on the brand. I mean, something like Dollar General expanding like crazy, but some other companies like Macy's, for example, is reconsidering how they have stores. They're really sort of pushing their backstage stores, which are smaller square footage. So it's really a kind of reconfiguring of retail. I still think the traditional mall, especially the smaller malls, are not going to do that well.
Yeah, I was telling my wife about the arcades. It used to be the malls had arcades. We would all go there in the 80s with our quarters and play all sorts of video games. They, like everything else, they've kind of gone by the wayside. Last question, if you're an individual investor, you've got an IRA or you just have a brokerage account, you mentioned REITs. How can an individual investor get access to some of this, these commercial real estate, other than investing in a REIT or investing directly if you have enough money? How do you get access to to this resurgency in commercial real estate?
Yeah, industrial REITs are probably your best bet there. There are also some individual crowd-funded projects. Companies like Fundrise and CrowdStreet have individual projects. Some of those are available only if you're an accredited investor. But some of the industrial REITs are really worth following. These are really strong, steady companies. One of my favorites is Prologis, which is the biggest industrial real estate REIT. Amazon is one of its top clients. It just keeps expanding, but there are lots of smaller ones as well that are continuing to grow. And these are really good, stable investments. Industrial is not a trend. We're going to continue to need more space.
Yeah, well, really interesting. Deidre Woolard, always a pleasure chatting with you. Thank you so much for sharing your perspective.
Thank you.
That wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to? Drop us a line, and don't forget, for all the latest curated news in lifestyle, wellness, finance, tech, so much more, and all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to see our latest content? Search our archives. We'll check out our website and our streaming partners like Amazon, Roku, Samsung, over 100 more. We're back again tomorrow for another edition of BRN AM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the First Lifestyle and Wellness Network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a tax doctor now for a tax emergency analysis.
Call 800-224-6439.